Now, one of the things that beginner retail investors like is obviously buying cheap stocks. By cheap stocks, I mean stocks which are trading at a very low trading price. These are stocks, mostly these stocks are penny stocks, which obviously one of the main reasons, like I say, why they buy these stocks is because they want to easily double their money, as it is simple for stocks or for most penny stocks to double in terms of value, simply because they trade at a very low share price. I mean, I've personally bought a stock that was trading at 1 cent, and I bought shares worth 2,500 rands, thinking that probably that stock will easily go from 1 cent to 2 cents, because from 1 to 2, then it means that I would have doubled my investment, which is one of the things that of course led me into obviously buying that stock. Low share price does not mean that you can easily make your money, you can double your money, but low share price or penny stocks, they come with a high risk, which is something that you should definitely be aware of, and maybe think twice before you invest into penny stocks. I'm not saying that all penny stocks are bad, but all I'm trying to say here on this video is to remind you that penny stocks are quite risky. But before we dig deep into this video, you already know that this video is just an entertainment video and not a professional financial advice video. Now, I would really appreciate if you can just hit the likes button if you do enjoy, or if you are enjoying the content that I'm giving you about a stock that I will disclose that just now, which I just lost my money on, and it's simply because it was a penny stock, and ladies and gents, it got delisted from the Johannesburg Stock Exchange, and ladies and gents, I ended up losing the money that I put on that stock. Now, before wasting any more time, yes, penny stock can be attractive in terms of the share price, but ladies and gents, these are stocks, or these stocks can be really risky. Now, the stock that, ladies and gents, of course I regret buying, which was a penny stock, which I just saw myself losing money this past week, or this week, was a stock that I discussed on this channel, and the stock goes by the name of Nutritional Holdings. Nutritional Holdings, now you will know that it was a cannabis stock, which of course one of the things that made me to invest into a stock like Nutritional Holdings was of course the fact that it's in the cannabis industry, and the cannabis, it's one of the industries which is said to do very well globally. I thought maybe investing money into this penny stock, ladies and gents, was going to of course give me or earn me some good returns, because it is found in a sector or in an industry which is said to do very well. And one of the most important thing that led me to buy this stock was that it was trading at 1 cent. So this is a stock that, with the very first time I bought it, it was trading at 1 cent per share. And this, of course, I think it is the same sentiment that a lot of people that bought this stock were having, and that is, of course, from 1 cent, or from a stock to move from 1 cent to 2 cents, you would think that it is very easy, especially for a stock like Nutritional Holdings, because of course when we check their financials, they were doing a lot of businesses, not only here in South Africa, but also outside of South Africa. They were, of course, exporting their nutritional products outside of South Africa, which was generating them some good money. They were having a lot of deals, which obviously was really giving us positive hopes of saying that this is a stock that will do very well. But ladies and gents, you will know that just before the share consolidation, you will know that Nutritional Holdings was sort of like temporarily suspended in terms of trading in the Johannesburg Stock Exchange, simply because there were some of the things, some of the rules that they were not following. There were some of the things which they were not complying, which is what made them to be sort of like temporarily suspended from trading in the Johannesburg Stock Exchange. And this came just before the share consolidation, which of course resulted in the shares, or in that 1 cent per share to become now 25 cents per share. We saw the share consolidation, or Nutritional Holdings announcing a share consolidation, which was going to convert that 1 cent per share into a 25 cent per share stock, which is something that obviously sort of like made some people to be really excited. And I remember I did a video about that here on this channel, indicating that share consolidation is not really a good thing, or it's not looked at as a good thing in a company, because it is taken as a lousy move. Investors don't take share consolidation as something that is really good, but rather investors, or one thing that investors really like, it's actually companies to do the opposite of share consolidation, and that is actually the share split, which you'll find that a company is obviously splitting their shares so that obviously more people can come in and buy that company. That is now taken as a bullish sign, whereas of course share consolidation, which is the opposite of share splitting, it is taken as a very lousy move by investors. So when of course nutritional holdings announced share consolidation, to me it was sort of like the first red flag to say that why are they doing this? If of course the company is performing well or is doing good, why are they doing this? Because as long as the fundamentals of the companies are accurate, good and strong, then obviously the share price will follow the fundamentals in the long term. So this, to me, when I heard that they are doing share consolidation, I was a bit worried, or that was the red flag. The second red flag was when obviously after the share consolidation, JSE, or Johannesburg Stock Exchange, coming out and saying that nutritional holdings is still not of course meeting their requirements, or their requirements to be able to continue listing in the Johannesburg Stock Exchange. I think it had to do with obviously that their financial, or some personnel in the financial department were not really qualified to do the certain jobs, or to carry out certain works within nutritional holdings, and the Johannesburg Stock Exchange wanted, okay, NUT to hire a qualified financial personnel that obviously will of course take care of, or will make sure that they comply with the Johannesburg Stock Exchange requirements, but they were failing to do that. So that to me was the second red flag, and I knew that, ladies and gents, chances of this stock to come back are becoming more and more slim, which last week, ladies and gents, when we got to officially hear that of course nutritional holdings is being suspended, or has been suspended from trading in the Johannesburg Stock Exchange, ladies and gents, it led to the shares of nutritional holdings to plummet from that 25 cents per share which was announced from the share consolidation, ladies and gents, to drop so low. I think when I check my holdings, they dropped by over 90%, which is something that of course it was sort of like scary to see the shares you own dropping by so much. But personally myself, I think I had only put like 2,500 on this stock, but I've seen people who had put a lot of money, over 20,000 rand on these stocks, which it's obviously not good to see a lot of people lose some good monies in the stock market, some good monies in the companies. But this does not mean that you must lose hope on the stock, investing in the stock market, as things like this sometimes they do happen. Now I know that some of the people might be asking as to, when you saw those two red flags, why did you not sell your nutritional holding shares? Well, the fact that they were temporarily suspended from trading in the Johannesburg Stock Exchange, I could not, or you could not sell or buy, because they were sort of like temporarily suspended. So you can only just watch your shares, and until, and I think it's been over a year now, ever since then until even this week, where we saw JSE announcing the delisting of these nutritional holdings, we have not been able to buy or sell shares. So those that bought nutritional early last year, they could not sell their shares, simply because the shares of nutritional holdings were temporarily suspended until they meet the requirements of the Johannesburg Stock Exchange, which they failed to, which is why they ended up removed from the Johannesburg Stock Exchange. So ladies and gents, this should be a lesson learned to say that the fact that you see companies trading at a low share price, that does not mean that that company is a good company, or that company will easily double your money, or it is the company that you should put your money in, because you can easily double your money. But you should definitely do a due diligence on the company that you put your money in. You should definitely make sure that you go an extra mile and not just hear people talking about companies and maybe buy, but also do your own due diligence so that at least you can be comfortable when you are investing on that particular company or stock. So I've gotten to that point where obviously if it's a penny stock, or if a company it is a penny stock, I try to, of course, stay away from it, unless maybe it is a company that obviously I've done a due diligence and I know that this is a company which will do very well. But most penny stocks, I can tell you right now, most of them end up being delisted. Most of them end up not doing well. It is a few penny stocks that you won't actually find them doing well and growing from becoming a penny stock into small to medium cap stock or company, which is something that obviously it must make you to be aware that obviously penny stocks, though they've got massive potential to double, triple your money, but they are quite risky. So those people like me who lost their money on nutritional holdings, one thing that I can say to you is that obviously this is not the end of the world. You stand up, you rise, you pick up your stakes and continue investing in the stock market, because in the long term, if you are investing in the right companies, ladies and gents, you are going to make some good money, especially now that obviously globally the markets are not doing that well. You can easily take this as a good opportunity for you to go in and load the boat, increase your holdings into some of the top quality stocks. Don't be that person that your entire portfolio is filled with penny stocks, or it's only a portfolio of penny stocks, but rather go and make sure that you also invest into top quality stocks with good track record, which obviously will be the ones that obviously generate or bring in some good money to you when the markets recover globally. Otherwise, with all that, guys, I just thought I should just share my sentiments about, or after I lost 2,500 from a penny stock called Nutritional Holdings, which I had bought initially when it was trading at 1 cent per share. If you enjoyed this video, don't forget to hit that like button, comment and subscribe. And once you subscribe, don't forget to hit or click that notification bell so that at least you get notified by YouTube every time I drop a new content. Personally, like I said, I've learned my lesson, especially from this stock which I could not sell for the past year, and that is of course Nutritional Holdings, which it made me to really even hate more investing into penny stocks, as the risk is just sometimes unbearable. So if you enjoyed this video, hit that like button and subscribe. And once you subscribe, don't forget to hit or click that notification bell so that at least you can be comfortable with stock. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.